Okay. Ready? Ready?
No, still we are unable to share our video.
Mm-hmm. 1 second. Good morning, dear investors. We at Zebu welcome you for the second panel discussion on your first million starts here. And the topic for the day is Algo is the future. And we have eminent panelists with among us, two of them from our company itself, Mr. Ramaswamy Annamalai, who is our national head and the president, who has about 16 years experience in this market and has done 400 webinars. And we have also Mr. Amit Somani, who is the AVP of our company, who takes care of our North Division, now Tamil Nadu as well. So we are also joined by other panelists. We will be introducing them a little later. 1 second. Video for Mr. Ramaswamy, please. Kindly enable a video for Mr. Ramaswamy. But till then, Mr. Ramaswamy, our first million starts here. So till the video comes live, that's all right. Please share your views on this. Why are we doing this? Why as a Zebu doing this?
Very good morning.
Starts here.
Very good morning, Suresh. I'm very happy to be here to this live event. Your first million starts here. This is our tag. See, in the recent days, Zebu has started this initiation. And we are doing so many awareness programs. See, the first we thought that we need to give awareness to the young generation. So we have started giving awareness programs to the colleges. As a part of this initiative, we have almost conducted live sessions. See, physical awareness programs in many colleges across Tamil Nadu as well as Andhra. Why Zebu has taken this initiation? This is what the question in all the participants' minds, and as well as it is a question, right? Zebu wants to create a awareness in the stock market. See, mainly in the savings arena, so many people knows about various kind of savings and not much about stock market. Various kind of savings means what people used to do is they open a savings account, they put fixed deposits, and they buy some bonds, they go and buy physical gold. All these things won't help them to become a millionaire. See, what these kind of savings will do is it will keep you in a survival mode only. It won't make you a millionaire, and it won't give you a financial freedom. The only product which make you financially free and which make you millionaire is the stock market investment. But why there is a much lack of awareness in this arena, and why people are much scared? We need to say that why people are much scared in entering into the stock market, because of the lack of awareness. 100% it is because of the lack of awareness. See, lot of myths are there. Entering into the stock market is very risky. Our capital will be wiped off. These kind of what myths are there in the market. That is why common people are very much scared to enter into the stock market. This is why Zebu has taken this initiative to create a very wide awareness among all people, all age group people, and with the proper knowledge and proper vision. If we enter into the stock market, we can make a very financially free life in our system. That is why Zebu has started this initiative, and your first million starts here, begins at Zebu.
Okay. That's true. I mean, people are talking about our initiative. In fact, we are getting a lot of calls from the colleges saying that, okay, we heard that you have done some great job in that college. Why don't you do it for our college also? People started asking us, and that's good. I wish you luck, Mr. Ramaswamy, for taking it further. Now, Algo is the future. Okay, so that is the topic for today. Let's find out. I mean, okay, now the video is enabled. Please, our suggestion to the question to Mr. Rachit Seth. Sir, can you introduce yourself?
Yeah, hi.
Briefly, yes.
Yes, hi, good morning, everyone. I'm Rachit Seth, founder of an application called Algobaba Stockso. Algobaba is our company and Stockso is the product name. It is primarily a desktop-based application that we designed, which caters to almost all types of traders. It is not just about algos, it is about a full control and authority over the algos when we talk about. So be it manual trading, be it your semi-automatic or be it full automatic trading, you should have several parameters available when you are entering into the market. So just to start with the when we say that algo is the future, and as Mr. Ramaswamy was highlighting about how colleges are promoting algorithm techniques. So personally, I'm a MBA, I'm a management student, but honestly speaking, I've studied from Mumbai. I've studied my postgrads from Toronto, but anywhere across in the postgrads program, there is nothing called a trading for stock market or any financial planning or any kind of thing, which lacks. If this thing happens and if Zebu has taken an initiative, that's really a good thing because even with the knowledge perspective,
Thank you. Thank you. Please continue.
So it is not about a game that we are playing in. It is primarily a calculation of numbers, a calculation of your support resistance. Those are nothing but just the numbered counts, and then we decide on the algo so that we don't miss out the trades. Algo is nothing but just to get you entry in time and
Okay.
exit out of the trade in time. That is what
Okay.
algorithm is.
Okay, sir. Now let me ask you a quick question. Is that say you've been in this market for how many years, sir? This algo providing. Say,
primarily we launched Stockso just 1.5 years back, but
I mean,
we have been into the market almost like 3 to 4 years plus.
Okay, fine. So how do you see the numbers changing? I mean, what do you have any statistics on the percentage of trades that happens between? I mean,
today when we would say about the options trading, if I specifically pull up half of the volume, as per me, half of the volume that you're seeing suddenly rising up in options trading is purely out of algorithm. Even when you look at the international markets, we have reached to a statistics of 50%, I would say, of the trades. But when we look at the international markets like Nasdaq, SGX, you would find 80 to 90% of the orders coming.
Oh, really? Okay. Let me go quickly to Mr. Pandirajan. What do you think? I mean, do you concur with him, or you have any different view on what he says?
Yes, sir. Yes, sir. Because we are the emerging nations, but we are lagging so much in technology terms. Because what I say algorithm is because every industry has it on its own learning curve, but in trading it takes around 3 to 4 years. But in algorithmic trading, it will shorten the learning curve of the particular trader. Also, you can backtest it whether it was working in the past or not. We have to know that through the algorithm. Fortunately or unfortunately, it needs coding stuff. That is the problem. If anyone knows the coding, he will go to the TCS and
okay. I mean, let me interrupt and introduce Mr. Pandirajan. Mr. Pandirajan is a good friend of mine, I would say. I mean, and he is the founder of Quantmandin. It's a very simple algo trading platform, a web-based platform, cloud-based platform, shall I say?
Yes, sir. Yes.
It has about 15,000 users. Okay, so good. He is helping a lot of beginner traders in executing algo trades. Please, that is the introduction. Or you want to say something more?
Yes, that's it, sir. That's it.
Okay, fine. Fair enough. Okay, now, Mr. Rajasekharan, to you. See, our team is earn your first millionaire here. So what is your opinion? I mean, Mr. Rajasekhar is the founder and of Trend Rooster. I want you to introduce Trend Rooster in a few minutes. I mean, about as briefly as I can. And then tell about how Algo can help people, a beginner to reach his first million if things works fine or with proper guidance?
Thanks for this platform and showing this interest towards awareness program and campaign. Okay, and for the Zebu as well as the panelist members. So let me introduce myself. My name is Raj Shekharan. I'm a founder of Trend Rooster. I've been trading since 2009 and I've traded in US market, Australian, and then currently right now I'm trading in Indian markets where I'm settled down here in India and Pondicherry. Okay, so the very first question is Algo is increasing the first question was if I understand correctly, the first question was Algo is making them more number of subscription. It evolves the people. So my guess would be kind of partially true and partially not true. Partially because the new technology era, it has already been available and the people are jumping on the board. And also the partially it's a pandemic helped the people to jump in on the board. Okay, so that's what I can think of for the first questions. Any other questions that you have? You're not audible, Suresh.
Fine. A follow-up question to you is that the migration of people from traditional to Algo platform. So what do you see that? I mean, what is the percentage of people trading in traditional with Algo?
To me or someone else?
To you, to follow-up question, yes.
Okay, yes. See, I'm a manual trader still now, but I'm trying to utilize tools for automating my entries. So like stocks, so last time I saw his presentation in Market Leaks, so that was phenomenal and it amazingly blew up my mind because the execution speed and the execution on top of another charts, it's like exactly that what I was looking for. This kind of tools will really help me out trading it. Okay. So other than that, QuantMan available. QuantMan is like you wanted to test it out your ideas. You have thousands and thousands of ideas. You wanted to test it out with the back-tested data. Whether it is really working or not, you have to test it out, right? Whether really does it have a crux? Does it have some kind of edge? So for that, QuantMan is pretty simple and easy forward. No need of coding, like easy to drag and drop, like wizard based. That works very well.
I definitely agree to it because I used it personally and I found it to be very good. And which Rashid said also as a follow-up, I say that when you explained in the marketing, it was quite a good software, quite robust one and very easy to use. And I'm sure the people who are watching it will be trying these softwares and benefit from it. Okay, to Mr. Amit Somani, who is our AVP, as I introduced earlier. Mr. Amit, you are getting a lot of clients, isn't it? I mean, every now and then you will be onboarding a lot of clients, a lot of new people who are coming into that. What percentage of the people who are coming in new, you think that, want to trade in Algo? Because you have tied up with a lot of Algo providers as well, isn't it, for our company?
Good morning, Suresh. Good morning to all panelists. Actually, you have put up a very good question. Every second or third person who is not having a knowledge of the market, also they are coming out, what is Algo? Can I do Algo? The second question which we ask him, sir, do you know coding or you have any strategy? No, I can give the money. Who can provide the strategy? So we try to inculcate that first you should understand the market. There are many vendors like Mr. Rachit, Mr. Pandirajan, they must be knowing. People are in the market who are just making, I don't know, should call them algo traders or robo traders. One strategy, they automate, they have a small inbuilt software, they give it to the people and start running. So people should understand algo is not so easy, like just switch on the button and it will start working, minting money for you. You have to have a research, you have to have a knowledge for that, you have to understand the market. Algo will help you automate your exit and entry. As my friend Rachit told very well, he said, they will help you automate this. The human emotions will be reduced in that. But before that, you need to have knowledge for the markets. Without knowledge, blindly investing will not get a good results in this market. I think Mr. Rajat, many times I've discussed these things with him. So he can also give some light on this, like how people are falling prey with these small one-door algo people.
So, Mr. Vachit, as Mr. Amit was saying, kindly can you elaborate more on it, because he seems to discuss a lot with you.
Yes. Now, see, this thing, I would just go back to a couple of years back. We still till date, although it is less, but we used to get SMSs about that. You invest this much, you get this much of return. And there were calls like, there are a lot of Indoris who would do like, 50% of the people of their client, they would give buy calls, and 50% of the people, they would give sell calls. So these ready-made algos which are being provided in the name of profits, I would advise newbies to test them out, to look at it things manually for a consistent period of time. I'm not saying that everyone might be wrong there. Okay, there might be some who might be doing it, but have you seen Ambani's or Jhunjhunwala's teaching you how to make money out of the market? No, right? So if I have a profitable strategy, I'm going to distribute it to you. I might as well use it for myself or for my close ones. Why would I sell it? Simple as that. So you need to be very cautious, because greed is the worst thing that people fall prey into the markets, because they think that, I won't do anything and I'll make money out of the market. That's not going to happen. You have to be at the system. You have to run around, even if you're using your VPS servers and you have your own custom algos running, still keeping a track over it or keeping a check over it is really important. So just giving away your capital to these strategy sellers, I wouldn't advise you to do that.
Okay. So what is your opinion, Mr. Pandirajan? Because this is what we face. I mean, a lot of questions from the first-time investors.
Okay.
Similar question is
there is two types of algorithms. One is being used for executions. Another one is for decisions making. The problem is, correctly Mr. Rajasegaran sir said, nowadays algorithm in the process to execute on itself, but not in the decision making process. That is what Amit said. Experience has come and play the role. Because computers would not understand the market structures. Okay, whether the market is trending or something like that. But in future, but not now, but in future, these market structure to be learned from the computer itself through the AI or ML. Some persons are already doing that. So what I feel, you take every technology, like say for example 70s IBM introduced the supercomputers. Now we are having supercomputers on our pockets, right? Technology is the deflationary. In future, maybe I become the irrelevant for the markets, because if everyone is playing in the technological game, how the ordinary retail investors like me, ordinary Joey, myself, to be survived? It doesn't make sense. So what I thought, we are going to at least our company Quanman mission is to give the very flat turf to the retail users. Otherwise, they cannot fight with the large institutional traders. They will lose the fight.
Okay. This question I asked you before in a different forum, but this time I want to ask you is that, what is your opinion on profitability in compared to discretionary as well as algo? I mean, you have any answers for that?
Very great questions, because I have been in the business for the past 5 years. So I talked with the various stakeholders, from Twitter influencers to the normal sub-brokers. Every sub-broker or normal broker, every influencer, I ask the very simple questions. Please give me the one person's number who have been profitable for the last 10 years. Still, I did not get any numbers from them. The problem is because we cannot, some person, then one more thing, every profitable discretionary trader I met, I asked the simple question, how long it takes? Every person says something like 5 to 10 years. So it is too long. Before the 5 to 10 years, retail investors will lose the money. They will out of the game. Then how can they learn them? How can they learn from the market? Because already they will be out. Because after pandemic, a lot of retail traders are coming into the market. See, for the past 10 months, market did not go anywhere. I talked with all the brokers. They said, okay, now volumes got been reduced, because they will lose the money and go to somewhere else. So we have to stop that first, at least.
Mr. Ramaswamy, to the question to you is how is algos can help people reach their first million? Because you already said why we are doing this. So now we need to connect this algo trading, algo being the future. How will this help people reach their first million? Will it help them reach faster?
Suresh, first of all, we need to understand what is algo and what
Yeah,
it
please,
will do
please.
and what it will make the difference in the traders cycle, traders life cycle. Because nowadays, what people are thinking, the retail traders who are entering into the market, as Rachit and Amit has added in their conversation, saying that machine will take care of everything. It is not like that here. Machine will not take care of everything. You see, for example, if we create a coding to trade and the machine will execute that coding, that is the only thing happening in the algo trading or automated trading, whatever you may call. Maybe nowadays in a colloquial language we used to call it as robo trading. What robo will do, what a machine will do, machine will execute your coding. It won't do anything else. But what is the difference? The difference between the physical trade, the manual trade, discretionary trade, and the algo trade is the only simple thing is it don't have any emotions. It will execute the exact thing what you feed in it. The physical trade, see, the very big trader and index developer, Mr. Victor Sperando, CEO of Alpha Financial Technologies, usually used to say that if the key to trading success is the emotional discipline. He always used to say this. He is in the market for so many years and he is well known to predict the 1987 crash in Dow Jones before a day itself. He usually says that the key to trading success is emotional discipline. Emotional discipline, how you can control. See, emotional disciplines in manual trading, in discretionary trading, emotional discipline is not at all there for many traders. I cannot say here as an investor. I can say as trader. There is no emotional discipline. The mission, if we saw the trading terminal, we used to call it as a stupid mission. It will drag us into that and execute lot many traders, more and more trades in a single day itself. If we start doing mistakes, for correcting that mistakes, traders are starting doing lot of trades on the same day itself. So here the algo plays a major role. The automated trade or algo trade or robo trade, whatever you call, it is playing a major role to control your emotions. That's it. So whatever, as Rashid said, you need to have knowledge, you need to have awareness, you need to have patience, you need to have sufficient capital, and you need to know what is the requirement from the market for your capital. By this way only you can make more money in the algo trade also. Here you can control the emotion. That's it.
Mr. Ramaswamy, thank you for your answers. Okay, if I'll come to every one of you for the benefit of the beginners. So we also know this, but benefit of the beginners and the viewers and the investors in the crowd, I want to ask you this. If you were to say this is the one advantage of algo trading over traditional discretionary trading or even traditional trading, only one, each one of you. I'm going to ask each one of you, what is the one advantage? Only one. I mean, you think. Mr. Pandirajan, let's start with you.
Yes, because as a human beings, we cannot follow the rules.
Okay.
Because we always try to break the rules. That is why all the police stations have to be here only. So
okay.
Imagine that, because even a simple super trend gives the profit, but you have to come and place the bet for every day. Is it possible? No. I say no, because all the epics to be formed on the human emotions only. Ramayana and Mahabharata, human nature plays the actually human nature drives the script itself. So we have to remove this human emotions from the trading. So like I said, you want to make the decisions mechanically, but as a humans, we are not wired on that way. It is against our system. So better to follow some computer systems instead of following our system.
That is one. That is from Mr. Pandiraj. Sir, Mr. Rajasekhar, your this thing. What is the one advantage you think is the
For me, it's execution. Okay, so whenever I try to have a lunch, only then that time we'll have trading signals. Okay, so I typically miss it out. So if I had to execute whenever the things are aligned tandemly, I wanted to enter the trade, but whenever I go for a tea or a lunch, only that time all the signals will happen, and I missed out of the day. Okay, this has been there for years. So if at all I say the only one good advantage is for automating the trade is by timely entering it. Okay. Exiting I'm not talking about, but timely entering is it's important also.
Okay. Mr. Amit, what is according to you is the most important thing for algo? I mean the advantage of algo over traditional trading. Mr. Amit. Mr.
It's not supposed to unmute.
No, okay, you are on mute. Please unmute yourself.
Yeah. It will put a consistency level, according to me, because what will happen when you have like the 2 points Mr. Pandirajan and Mr. Raj Shekhar had said, it will remove the emotion, it will give a good execution. These 2 points will then lead to the consistency.
Wow.
Consistency will keep on creating, month on month, you will keep on creating these things. So you will be more disciplined on this.
Okay. Mr. Rachit Seth, with your considerable experience, please tell us.
Yeah, I would like to add up or rather continue what Mr. Pandirajan and what Mr. Rajshekharan has said, because these are two important vital elements, as Mr. Pandirajan was talking about, like a super trend strategy, a very basic strategy to look at. The problem with the people is they run behind the complexities. If the code looks complex, they fall in love with it because they feel that, they assume that it's going to make them more money. So as Mr. Rajshekharan says, it's primarily about the entry. And as Mr. Pandirajan said that, whether you're working with super trend or moving average, everything is profitable. Let's say, for example, you're entering into the market with 1 lakh of capital and your super trend is giving you 2,000 rupees of return and you're still not moving out. So super trend will give you a reverse signal only when the trend has failed. Only when the trend is failing. So you were in a profit zone, but you did not book the profit. So even if you work around with the consistency of over 1 lakh, you make 2,000 rupees a day. So 22 days, you're going to make 44,000, which is almost 44% return. There is no company in the world or no product in the world, which is financial product, I would say, is going to give you 44% return monthly. This is the kind of thought which is lacking when people come to the algo trading, because they all want to be millionaires overnight. So they need to change this perspective and, be more logical in approach. And that's how you become a professional algorithmic trader. So everything is profitable. Only thing is that you should have everything calculated. So this is from my end, but yep, that's how the thing should be.
Okay. Mr. Ramasamy, our national president, please, what is the one advantage you think is the important, other than what our other panelists have said?
I hope everyone has covered all the points, Suresh. Maybe if I want to add on means, again, I'll tell you, maybe the only point I can add on for this is we need not to sit in front of the terminal for the whole day to enter or execute a trade wherein our strategy works or our theory works. So it saves time. Maybe it saves our time and the strategy. If we input the strategy and it can execute it automatically, maybe exit. Mr. Rajshekharan is not accepting the exit point of view, and I could say both entry and exit can be done without our presence as we feed the strategy into the system.
Okay, that's good. Okay, Yeah, please. So, Mr. Panelists, you were about to say
Yes,
something.
because Rajesh is an expert, so he knows when to exit when compared to algos.
Okay.
Because
No, no, in
he's
fact, let's keep this meeting like this. I mean, this panel discussion like this. Instead of
Yes,
me
yes.
talking, you talk among yourself. That let's keep it lively so that
Yes,
audience will enjoy it and this thing. Please
yes,
talk among yourself, please.
because I knew him personally. He
Okay.
spent a whole life for options trading. He's doing options profile. So he is an
Okay.
expert. Easily he is going to beat the algorithmic. But I am the novice trader. I cannot beat the algorithm. That is what I follow the exit also in algorithmic trading.
Okay. So a follow-up. Okay. Let's go to Mr. Rachit said. So see, there are many, let's say, multi-leg option strategies, isn't it? So, so how algo trading helps in doing that? Because many of our viewers and are probably beginner investors / traders. So, what's your opinion on that?
Now, primarily when we talk about options trading, okay, multi-leg strategies and all, what exactly are they? You know, it's straddle. What exactly is a straddle? When I'm just picking up 2 strikes and selling it. Now, when I go to a regular broker terminal, just to place 2 orders, where, you know, some brokers provide basket orders, some brokers do not provide that, and plus, you know, managing target and stop loss on the combined level of strikes, or, you know, on the premium basis. For these things, we require algorithm. These cannot be fired. So multi-leg primarily strategies were designed specifically for algorithmic trading. They were never meant for manual trading. Okay. And that is how you are able to derive, you know, condor, you know, just fire a condor, you fire a butterfly, you fire a straddle, give me a combined premium, give me a risk management over this. You know, if one premium fails, one premium is rising, continue with the trend, wait and trade. All these terminologies were derived only because we had systems-based trading. With the manually, I don't think so you can work around just with the options. I mean, personally, that's my opinion. If you want to fire up 4 strikes, I think I would be roughly wasting about 2 minutes over a system just to fire 4 orders. And
more than 2 minutes if it's for me, I'll tell you. I need to hunt for the strike.
I mean, it's not about stock so that we built it across, but we have other gentlemen too, and they have their own beauties available at their desk. They are, I mean, if you ask them just to fire a 4 straddle going to a Zebu terminal or to any other broker terminal, will they agree to fire? I don't think so. They would fire. You know, because that's really important. Now, when you're playing around with the options, you need to be a systems-based trader. And most important of all, before you become a systems-based trader, is that you fall in love with your chair. You know, get a good chair, fall in love with it, because if you stick by to it, then only you become a professional trader. Otherwise, it's pretty challenging.
Okay, and I request the panelists to talk about yourself, and also the viewers. Keep the questions coming, because to get this panel again might be very, very difficult, because we have experts and we have, external experts and in-house experts, and the external experts have been profitable traders for quite some time, isn't it? So let's listen to this profitable traders. If you want to reach your first million, listen to the experts. They have made their own share of mistakes. Have you done mistakes, Mr. Rachit?
Of course, we all did.
You all did, isn't it? And you made mistakes. You survived here to talk about it and smile about it. Okay. So if you want to avoid, beginner investors, just traders, I'm telling you, you cannot avoid mistakes. But the thing is, at least you can cut down your learning curve, as Mr. Pandirajan was saying, by learning from their mistakes and try to avoid it as best as you can. So my suggestion is talk among yourselves too. Ask questions, cross questions. Let's keep it lively. And audience, please ask questions, because this panel is again to get hold of them might be very difficult. They are experts. They are algorithmic experts. They are profitable traders too. So you want to learn from the horse mark? This is the time. Ask the questions. So between the panelists, yourself, I'm just requesting you to ask some question to other panelists, please.
No, I will start. I'll start myself, Rajshekhar, but I wanted to explain, because the entry is important. The exit, I have multiple plans. Okay, so example, why I'm not automating in one single, like a stop loss. Okay, stop loss is a typical people will be exiting, right? I will be, if say example, one iron condor or iron fly, something is going out of my level of stop loss. where I will be deploying another strategy in it. Okay. Because that is not automated with the current infrastructure of algorithmic trading or anything else right now available. So for me, it's entry is important. That after that, it's managing is all manual. Okay. So when there is a stop loss level comes, then I'll be deploying or some other strategy or moving forward, adding it to the layer or adding to another strategy on top of the existing strategy. So these are things, I typically do to manage the entire portion. Also, there is a concept called profit maximization. Once your profit, it's not just exit. You need to maximize it. Market is not going to give you every time profitable opportunity. Okay, you coming to market taking 1 rupee to risk and making to 2 rupees reward. That's the best risk versus reward, I would say. So once you are profitable, you have to try to maximize the existing profitability. So that is something is not available with current algorithmic infrastructure, or it is not codable right now. So where I will have to deploy manual. That's the reason I said it's entry is most important, because the entry is where I need automated, but exit and all I will manage it. Okay, deploying customized another strategy on top of the existing strategy, or extending it, changing the expiry period to next expiry period. These are the things, typically I'll manage it so that I'll end up in a roughly profitable or at least no loss gain. So these are the things that I will do manually. You are not audible.
Okay, Mr. Rajshekhar, if you want to ask some question to panelists, I'm just asking you without any time. I'm just bombarding with this question. What question would you ask to any one of the panelists?
No, for those who are in a pro and algo, is it algo is like A plus B equal to C?
You ask to one specifically.
Okay,
anyone.
I'll ask Rashid. Is it A plus B equal to C is a market? No, if then everyone will be profitable, right? I'm asking the same questions.
Correct.
That's it.
So now I'm just ask. Please respond to it.
Rachid has to answer.
Because we have some good minds here. When you talk among yourself, there's going to be good learning for all of us here. Me personally, I will be learning this thing. I've been following your presentations in the last week, and I learned quite a few and started implementing for my trading also. So I'm sure that other people are going to benefit from this. So talk among yourselves. Let's find out this thing. Any questions you ask?
No, I asked questions. Is it market like algo? Everyone is talking about A plus B equal to C, is it?
No, it is not.
No, please elaborate on it. I want to see some cross talks happening.
Your question is something that wouldn't cross the barriers or cross the normal minds who are here to understand the basic algorithm. So your question is quite an elevated one.
No, shall I add my point? My reply to Rajshekhar is A plus B is equal to C. It is not all the days. See, if you are going into algo trading, in 100 days, A plus B is equal to C on 80 days. And it is not the same answer for the remaining 20 days. But overall, if you are in if you are sticking into a system, it will give a result that A plus B is equal to C.
As they say in Tamil, Sabas Shariana Poti, I want to see this happening here. Talk among yourselves. There will be some, I guess, great ideas that is coming out of it. Let's see how it goes. Okay.
See, the algorithm has to grow up. Okay, so right now everything is automated trading strategies. It's not exactly algorithmic. Okay, so Pandirajan mentioning is eventually it'll come up. It'll come to MIAA. So I'm not expecting MIAA. All I want is something like if the strategy which I deployed, if something is about to stop loss hit, then I will have to deploy some manageable positions. So that is then I can able to modify it easily without come out with the stop loss. If the stop loss is the only thing automated strategy can do, it is not algo for me, at least for my definition.
Okay. No, I want you to elaborate on it. What is algo and automation? I was thinking it is same. So please, a lot of people also.
ATS. Okay. ATS stands for automated trading strategies. Algo stands for algorithmic trading, right? So we are talking about ATS and Algo. Algo, it's something like when if you deployed it, that comes with decision-making process. It's on its own. Other than that, additionally, we have predefined a few. For example, if about a straddle go to about to stop loss hit, then it will not directly exit and come out. It will deploy some other mitigation strategy and then manage it. Okay, so that's how it is. It's supposed to be algorithm. But right now, what we are facing with the current technologies, it's like automated trading strategy, which the straddle goes and then about the stop loss, then it will exit and then come out.
Okay. Okay, I will answer it because I attended his session very well, so I know him personally too. I accept totally, Raj sir, but we are working on options adjustments. It is on beta testing phase, so within 1 or 2 weeks we are going to release it for options adjustments, but not up to your level. At least we try to break this. Because
nice. I'm glad it comes. Okay, nice.
Yes, sir. And also I'm going to add with Rachit sir also, because I am poor at typing. Normally I take for 20 minutes for reply for email. Then I am the basically Bank Nifty trader. Then how can I place the order in Bank Nifty? If signal comes 100 rupees, when I am going to type, it crosses 200. Already everything has been lost. So that is the major crux.
Okay. Okay, my video feed is okay, fine. Now I will ask you this question, sir. The Rajashekhan sir also. See, as a layman or a beginner investor or even a seasoned investor, for me, only thing that matters is how much I can make, isn't it? So ATS or automated trading system and Algo, which gives more profit or a chance for more profit. That is all I care about, isn't it? As a beginner, as a trader, let's say, or Algo investor or a trader. So which do you think has a better chance of giving a profit to the client? Because the only difference that client would understand is the money. Where is the money? Show me the money, isn't it? Mr.
See, the automated trading strategy is a shorter learning curve, as Pandirajan mentioned. So, okay, manual, it takes longer time. At least 5 to 6 years, you have to go through the lot of struggles and then deep learning curve, and then eventually you'll be profitable. Okay, so if beginners comes, then they'll pick up a few automated trading strategies, and then they'll get the ball rolling. Okay, by deploying few strategies, and then it's making testing out of the market what is comes everyday basis. Say there are famous 920 straddles, strangles, and then managing. A lot of strategies are available, but it was making. But I believe last couple of months it's not performing. Could be the over exploitation of the terminology, maybe. Market dynamics keep on changes. That's what I said. There is no A plus B equal to C. Market dynamics keep on will change. So we need to deploy not just to believe on the only single automated trading strategies. We need to have a different curve, equity curve. Say example, you need to have a breakout trading strategies. You need to have a pullback trading strategies. You need to have a trend trading strategies. You need to have a morning time-based trading strategies. You need to have a BTST. So all put together, you will have a nice 30-degree equity curve. Okay. If you just believe on only one trading strategy and deploying all your egg nest to the one trading strategy, that will become ready for suicide. Okay, so it's not. You need to diversify your automated trading strategy. It's such a way that you will be getting alpha every day or every week or every month or every quarter.
Okay, so if one is to deploy so many strategies, that would require a decent amount of capital, isn't it, Mr. Rajashekhan?
See, straddle you need maybe 1 lot, maybe 2 lakhs or something like that. Another, say, straddle is not every day is profitable, but every day for some of the pullback trades are profitable, and you need to have some breakout trading strategies. See, this is a business. It's not something like you want to try out in a part-time time. Okay, so. If you are coming to business, you need to have adequate capital, some adequate capital, so that the business equity will pop up and evolve.
Okay, now I'll ask this question. So what would be, according to you, give a ballpark figure on how much would be the adequate capital if someone has to deploy, say, reasonably diversified strategies?
Around at least somewhere 8 lakhs.
8 lakhs is what is required. Okay, probably
Minimum,
not for the
that is,
beginner.
these
Minimum.
minimum.
Okay, and your estimate, I mean, you cannot answer it this thing. What is the chance, I mean, reasonable chance of how many percentage can one make if it is?
No, if you can make 2% in a year, in a month, that would be far enough for your
Okay,
capital.
okay. That is where most of the beginner investors or even intermediate investors fail, because they don't understand the importance of making consistent 2%. They think that is very less and end up they want to make 10% and then end up losing 40%, if not more. Okay.
No,
So
only one advice I wanted to give is and stop daydreaming. Okay. That's the only advice I could think of the beginner traders. Just to stop daydreaming.
Okay. This is that is a contestable point. Let's see. Anybody else has any other opinion
I just want
on
to
this?
add,
Yeah, please. It needs to be contested. Yes, please.
Raj sir has given a very good point. Stop daydreaming. Because when we speak to ground level people and tell them to get 2% monthly is good profit, they say for 2%, why should I come to the stock market?
Where else would they get it? I mean, just as a, where else can I get 2% safely? If
they are saying 2% we can earn ourselves, then why should we come to you, or why should we go to some strategies? How will they help us earn 20 to 25% monthly? They are looking at. So this is a very valid point Raj sir has picked up here. I also should, I'm adding this here because new people who have joined, they should just make it 2% is a very good return. If you calculate yearly, it's 24%. Where will you make 24% in a year?
Yeah, if it is monthly compounding, if you are to calculate it, that will be about 28-29%. Mr. Ramaswamy,
I hope the clients with Amit is not that much greedy rather than the clients associated with me. Nowadays, clients started asking how I can get 100% in a month, how I can double the money. A lot of clients are coming and saying, see, the problem is in the recent past, I came across a lot of tweets. A lot of tweets are flowing into the market participants saying that I have made 10 lakhs today. I have made 15 lakhs profit in the expiry trade. I have made 25 lakhs profit. And I'm not saying that this is in the recent past. Maybe in the last 6 months, I came across a lot of tweets from unknown persons. So many persons have started posting that they have started posting the screens, they have started posting the MTMs and saying that blah, 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 made this much. And in the recent 1 week or 10 days, in the last ups and downs, huge swing in the market, they started posting, I made a loss of 25 lakhs, I made a loss of 10 lakhs, I made a loss of 15 lakhs, like that. See, if a common man who is looking into these streets and exploring to the entering into the market, expecting that we can earn 25 lakhs or 30 lakhs in a market like this condition. In this condition, we can earn 25 lakhs or 10 lakhs or these kind of things in an expiry day trade itself. This is what I'm witnessing. I'm coming across the new age traders. You should not say as investors. That asking that how can I double my money? Then I don't have any answer to that.
No. Double the money in how many years?
But
in a month.
Oh, if you come across this strategy, you must let me know, Mr. Ramaswamy. Then Mr. Rachit said, since you definitely would have say interacted with many clients. If not you, your team would have interacted with this thing, isn't it? So how do you handle these expectations from the people? They expect to double the money because they want to, there is an algo.
About the expectations, if you talk about, we barely, we don't actually entertain those calls because it's primarily, people at times call up. Like right now, if you see on the chat, we get a question, what is the accuracy of algo trading? Okay, so we would straight away deny that because herein we are just an execution utility provider. My job is to fire it up. My job, I'm just a weapon supplier like Russia into the market, nothing else. Okay, so I'm giving you the weapons. Logic is your, brain is your, target is yours. Okay, you want to hit them hard, I'm going to help you. Okay. But if you tell me whether the person will die out of 1 bullet or 3 bullets, that's not my job. So get one thing, these kind of questions when people have, like right now, there's one more interesting question over the chat, if everyone can look, by Mr. Sandesh, that as we know in the Indian equity market, there are two major players, FII and DI. When there is a big buy and sell between these two institutions, there, then for retail investors, what is the exit level percentage to me? Now, this is a question. Now, do you know whether you buy anything, you walk into a grocery store, there is always a wholesale buyer, there is always a bulk buyer to that store when you're walking into several stores. Why do you assume that when it comes to the stock market, it is totally a different game? It is purely that you are investing in several companies, whether it is option or whether it is your option is on indices, but I'm talking about stock options, or whether it is about your shares that you're buying. So you are becoming an investor to the company. FIS and DIS are present everywhere. You go to buy a gold there are also wholesalers. You go to buy a medicine, that retailer is offering you 15%, wholesaler makes 50% out of that. So where these things don't exist, why are you talking about, theoretical knowledge, FIS and DIS? Do you think FIS and DIS are new to the market? They've always been in. Who drives the volume? Who brings in the volume? Retail traders, not like you and me, are bringing the volume, boss. If you think that you're buying 1 lakh lot of options and you're a big trader, then trust me, you're not even in 10%. It is the FIs and DAs. They have always been present into the market. Okay. So when you say that I believe it should be less than 1%, now this is where your belief is wrong. Understand, if I have more quantity in hand and I'm getting a desired output, I'm gonna deplete it first. Whether you walk into a fish store, whether you walk into your grocery store, a big wholesale depot, Walmart and everywhere, it is purely about depletion of the stock as early. So when you say 1%, probably the FIs and DIs are clearing some of the pileup that they have in hand because they have made a sizable return, and that is probably the retracement. Now the profit journey is about to begin, and that is wherein you're out, and when it is about to end, that is wherein you enter. This is the problem. Now just ignore the FIs and DIs. Do the business as if you are investing. Okay, if you feel like that these days EVs are driving the model, so Tata Motors stock, for example, I mean, do not go and just blindly buy Tata Motors tomorrow. I'm just telling it. For example, EVs are the future. Tata is doing really well. Now 5 years down the line, maybe Tata could capture up the market. Okay, so it is your investment in the trade. All the big traders, they have been a part of FIS as well as they have been a part of individual traders too, because there are several small clutters investing into several groups. So you need to understand, and you don't need to be afraid of FIS, and these are all theoretical knowledge that has been distributed. It is always there. It will always be there. Just like you breathe oxygen, FIs and DIs are the oxygen to the market. You cannot ignore them. So craft your way out to do a better trading and ignore this part. This is my, knowledge to the newbies or to the people, whether they are entering manually or algorithmic. This is what you should be clear. Do not restrict yourself. It should be less than 1%. No, it should be 0.5%. It should be 2%. You are just creating a barrier before you enter into the market.
Okay. Fair enough. Anybody has any contrarian opinion to this, or everybody agrees with him? Because I want to see some.
Maybe I am the contrarian person.
Yes. That is what we like. We want to keep this interesting, so that for the audience, please.
First, I will come to the point of Mr. Raj. He said only 8 lakhs capital, right? In India, only 1% of the people making money more than 8 lakhs, more than 5 lakhs per year. How can we do that? In famous Tamil comedy, in Karnas is asking, "Karla irukavanda kalyanam panna, cycle irukavanda enna pandrathu?" So I am asking in that way. So one question. Second question is expecting higher returns from the retail audience. We have to think on their shoes first, because they are asking more risk premium, right? Why do we do trading? Because we want some quick money. We are ready to take the risk. So their expectations is much higher return when compared to the normal return. But I don't accept monthly 20%. I'm also not accepting. If I get the same return like Nifty ETF, then why should I trade first? Maybe I sit in the home and watch Netflix, enjoy the stuff, right? So that is the point I am wary. So expectations is when retail traders expectations should be may be high, but we have to expect much higher returns when compared to the mutual funds. That is my point. Actually, your voice is not audible, sir.
Okay. So you have any strategies or bunch of strategies that can give, chance of giving higher returns? How is
Yes,
it?
but we have to accept the risk. I'm very honest with this.
Okay, fine. Everything comes with risk.
Yes.
Entering the market, if you are risk averse, don't. If
Yes.
you this thing. So
Nowadays,
yeah, please, Ram, sorry.
the retail traders' risk is the entire capital. This is what happening in the recent times in the market. I have came across a lot of traders who are ready to take the entire capital risk, entire capital as a risk in a single trade. Because what the myth is nowadays, people are thinking that with very much lesser capital, we can make more money in options trade. So what they are taught, or what they are being known that if I trade in options, my capital is 5,000 or 10,000. As Pandirajan said, and everyone is not entering into the market with a huge capital that like 8 lakhs or 10 lakhs kind of thing. Nowadays, the traders started entering into the market with 10,000 or 20,000, saying that I'm taking risk for the entire capital for earning 1,000 rupees. But we need to have a massive change in the mindset, stating that, as Rashid said, this is a business. This is not a game. This is a business. We need to know what is the returns we can get from a business if we deploy this much of capital. Then only, whatever, if it is a discretionary trade or it is an algo trade or whatever you can say, ATS or whatever you can say, we can make money, we can make money from the market. This is what I want to add on in this conversation.
Yeah, this is precisely the reason why we have this kind of webinars, seminars, panel discussions, and offline events at colleges and other places also, investor awareness programs. The reason is that we want to tell it to the people what is possible, what is not possible, what is the risk you should take based on your age group and your income group, how much you earn, and all these things. So that is the reason why we have to start at this program called Earn Your First Million here, and to help the people to know the truth about investing and trading. So that is why you find people are here to help them out. There is one question which says that if there is any other opinion on this, you can say that. If not, I will go to the next question, which is asked by one of our people, attendees. Shall I, or you have any other opinion? Okay, I will go to this question. Which coding language is recommended for trading? People are asking that. First, even before going into that, should people actually need to know coding before to use Algo? Mr. Pandirajan, since you are smiling, so I will come to
because
you first.
Rachit sir and I also agree the same thing. No need for coding. Even in future, coders not to be available, because AI is going to take all the coding job. So, but right now we are in the situation, but we are creating our product because no need to code, backtest your strategies, and also live deployment. Maybe Rachit sir would add some points from here.
Which coding language is recommended for trading? Now, this is, sir, Mr. Vikram, rather than going behind the languages, okay? Whether you speak Tamil, whether you speak Hindi, whether you speak English, okay? So whatever you are talking or speaking should be understandable to you first, okay? So if it is not understandable to you, probably I may be working around with some other language. Maybe Mr. Pandirajan may be working with Python. I'm working with .NET. So I'm working with Java. So it's a very wrong question that you have in mind. You should, rather than asking which language for coding, you should focus on which strategy to work around with to make profits. Because if you don't know what strategy is gonna give you money, what are you gonna do with the coding? Okay. And the most important part, see, as Mr. Pandirajan said, there are utilities like, for backtesting or for live deployment, whether it's his platform, whether it is my platform. And if you are gonna working around with the testing of the strategies, you are following some mentors. Okay. These days, YouTube is like quite popular when people, follow several mentors, new courses. There's no harm in it. We all have had our part of learning from there too, and it is nothing to hide. We have learned from people, and that is how we could design a better systems to trade, because we had primary knowledge that how trading works. That is how we could code. Okay. So this is very important, and you can always experience with live trade simulation, I mean, which we offer, for example, or there may be some other thing, but simulation is something which is not like the paper trading that we see into the market. Simulation is something that works around with the realistic conditions. Let's say, if you're deploying a straddle, this would be my sell trailing, this would be my target trading, this is the max profit. So all those conditions come to life, but you don't risk out a single rupee. So even if you're following up someone, you have learned the knowledge, you're following up with the mentor, you are gonna make mistake, whether it's your learning part, whether it's your execution part. So for those execution part, we and Mr. Pandirajan and Mr. Rajshekhar, we have certain products like, wherein you can avoid these phases of rough phase, I would say, that we have been through it. Okay. Why do you think all the biggest depressionists become the best therapist into the world? It is because we have been through that. So understand that we have had our own phases, rough phases into the life, into the market. And that is why we could design systems after understanding or going through the rough patch. So understand this, rather than focusing on the language, focus on the work and on the profit or the strategy that would give you a good return.
Mr. Amit, you have any this thing? What would you suggest to people to code or use the already available platforms?
I would say that there are many already platforms. So why spend our time on coding and all?
Very good.
To work on the strategies. Which strategy will be profitable for whom? Because same strategy will not work for all people. Different people have different mindset, different targets, different profit levels, everything. And in the same, like Mr. Raj sir had also said previously, the dynamics keep on changing of the market. Because I remember in 2008-9, there was a Nifty, I heard Nifty will only vary 200 plus, 200 minus. If the last expiry, it is 200 up, you short the Nifty, you will earn money. I paper trade for 6 months. I saw, yeah, this is working good. But the 7th month, Nifty shot up by 500 points. What happened? The dynamics changed. So
you're not alone. No, we all did that. Yes, please continue.
That should not stop. Instead of specifying on the language, we should specify on the market dynamics.
So, Mr. Rajshekhar, your opinion on this?
I'm not exactly opinion on this. I would say this is a business. Okay, so don't just believe in one trading strategies. So as with any entrepreneur, he will always look for 5 streams of income, 7 streams of income streams. Okay, so we need to have a similar principles in this trading. So if you have a breakout trading strategy, then deploy it and some small capital, run it, and then pullback trading or BTST one trading strategy, run it. So like that, you need to have a multiple trading stream of income, so that your monthly 2% almost not exactly guaranteed, almost guaranteed. Something you will be in a positive and green. If you just believe in one trading strategy, that market dynamics will change, that one strategy will screw up. Okay, so that at least you can take away and then deploy some other strategy into your basket. So I would recommend always to trade with the basket of strategies to get the consistent return and month after month. So if there's something, the market dynamics keep on changing, 1 or 2 will screw you up every now and then. Take away and then deploy what is available for that month and deploy it. So every time you have a 5, 6, 7 trading strategies are running and making you green after green. That is what is possible. Don't believe in only one strategy and don't put all your egg nest into one trading strategy. Okay.
Okay. So, Mr. Ramasamy, you have anything to say to this?
Say, as said, language is not much more important in coding. I also go with Rajit said, as he said, whatever it is already available as Amit Somani has added. Already there are a lot of systems are available, and why you are bothering about the language to code your strategy? It is not required. We need not to fix with a single coding language.
Okay, fair enough, fair enough. Now, say, algo trading, some believe it to be a magic box which is going to give them a consistent return. Okay, I mean, they are entitled to their relations. We cannot say no to that. But assuming that it is so, I mean, it is consistently giving either one strategy or a bundle of strategy, as Mr. Rajasekaran is saying. What is the cost of trading in algo? Because there is a cost, isn't it? Say a couple of thousand to, and the high thousands, we could say. What is actual cost of trading? So how much capital one needs to have to overcome the profit, to overcome the costs that is involved in the trading? Is it for everyone? I mean, the people, even with the people with say 50,000 rupees capital, is it sustainable? The cost sustainable? Mr. Pandirajan, we'll start with you.
If I say the answers, then it will become like a Quantman advertisement. So,
that is all right. That is all right. If you're not going to talk about Quantman, who is going to?
Okay. I will answer it because in the past I said every technological innovation is a deflationary thing. Say, for example, Netflix introduced 1,000 rupees, now 200 rupees. Even phone call charges, SMS charges, every technological to be a deflationary. Why? In the last 10 years, we spent very low amount for oil. Why? Because horizontal drilling to be founded in US. So if any field technology comes to that field, that cost will be drastically down. So in algorithmic, we are in is very starting stage. So cost will be becoming so less in future. But say, for example, in our platform, we are offering 1,000 rupees plan. So maybe you will try with 1,000 rupees. Even 250 rupees also, some platforms are offering 250 rupees. Maybe we will try that. So, but in future, I will say only one thing. In future, surely cost will be reduced drastically. That is my point, sir.
Okay. So, Rajashekaran sir, you are also using some algo in some form or other. What is your cost? What do you think the cost would be?
For me, it's only for execution. Okay, so because I manage my portions, cost is nothing for trading. This is a business. As again, I'm reiterating the same thing. This is a business, so you need to have a minimum cost for the running the business. So entering and exiting, these are nothing. I mean, just a peanuts.
Oh, okay. So it is. So if the person who has a sizable capital, this algo cost is it's negligible. That is what you are saying, isn't it?
Yeah, just a peanuts. So run a business, you need to have an infrastructure. I mean, how do you run a business?
Okay. You need to pay for your tools.
If you're spending $1,000-$2,000 over behind the trading, utilities, like we sell stocks for 750, or Mr. Pandirajan gives it for 1,000 or 500, whatever the price range may be. See, it depends on the certain features. So even if you're investing $1,000-$2,000 over your trading, over your business, I think it's very much negligible, because it's like 35-40 rupees a day, 50 rupees a day. That's what you are spending. Probably when you are going to just to one location, you would be spending more, or herein you are getting return out of that. So I don't think so you should assess the cost really, but you should rather assess the quality of executions, the requirement that suits your trading style, the platform whatever suits your trading style.
Okay, and fair enough. Yeah, please continue, please.
You should go ahead with that. The problem these days, what I see with the youths coming up, they're making money out of it, but they don't want to invest, but they're happy going to an Apple store and buying an iPhone on the EMIs. This is what the
Who doesn't?
perspective
Who
is.
doesn't?
So they are okay paying 3,000 or 2,000 rupees as interest to them, every month on month, because but when we talk about trading, whether they come to the broker, okay, what will be my return? You are buying a depreciating asset, plus you are paying extra interest on that, and you're okay with it. Okay. But when it comes to trading, when you come to the broker, you will ask them that, what would be my capital return? Oh, 2%. Arey, you are spending 5 to 10% over your that piece of crap, buying over EMIs, and you're asking for the brokers, and plus with the systems based provider, you are asking, that this is the cost, whether it's 750 or 1,000 or anything. So you need to understand that herein it's about investment, it's about your business that you're intending to do, rather than just shelling out an expensive rate of interest. And you're absolutely happily doing that. Even one time of a dinner, a family of 4 goes to a decent restaurant, you would be spending 4,000 to 5,000 rupees. Okay. That is the just one time cost of a dinner to a fine dining restaurant. And when we talk about business, when we talk about execution, then that's wherein we are assessing whether 1,000 is more, 2,000 is more. I think that's absolutely illogical, I would say.
Okay. So, I would also say that, I mean, the slippage that it saved itself would cover the cost of Algo. That is my thing. Is it true? Because this manually, if you are to type
simple thing
order,
is like, to me, if I tell you, like, there are 5 option strategies that I wish to fire when this super trend crosses. These are 5 different portfolios. And my algo, for example, is firing it up that very moment. My cost is covered for the month. I'm done. Simple as that. Because firing those 5 things, you are saying what is right, slippage and everything. But just look at the convenience, one thing. Me going and running by the, this is moving, this price has moved from 100 to 150 now. Now you will fall into a trap. Should I execute? Was I right? Was I right? Is my strategy going right? No. I should look at the other perspective. But if you had a system, you are into the trade that very moment. So that piece of convenience, that piece of relaxation, I don't see it as a cost to me, whether it is 2,000 or 3,000 or 5,000, somebody comes up. So it's all about convenience. Simple as that.
Okay, Mr. Amit, because you are onboarding a lot of clients, particularly algo clients. So how is the people receptiveness for paying for algo? I mean, what they say, they are totally agree with that. I mean, they're okay with whatever cost that is.
Can you please repeat once?
Okay, so you are onboarding a lot of algo clients, isn't it? These days, I seen you onboard a lot of algo clients. So how do this newcomers take to the cost of algo? They are okay with it. They want to negotiate.
I tell them only one thing. You are doing some business. Which business in the world you can do without any investment?
Sahi.
Any business you tell me without investment, I will also do that with them.
I will also do.
Every business has a cost that the person has to bear. Even in the service sector, you see, if I'm doing service, if I keep on investing some part of my salary on myself to improve myself, that is the cost I'm putting on myself.
Okay.
So that is also investment for me, which will reap me good results in future. So people have to understand this, that any business we do, we have to put some investment there. Nothing comes free in this world.
Okay, fair enough.
Comes free, then everyone will be a millionaire over there.
Okay, Mr. Ramasamy, you want to ask any questions to the panelists other than these questions, or any topic on this algo and
no, not any questions to add on to this conversation. We need to calculate our returns by adding all the cost only. So, so if the returns you are seeing, if the returns you are seeing in the particular strategy is 2%, it comes after deducting all the costs. The costs are all involved. In whatever business you do, you will add the entire cost, and then only you will keep your profit margin in that business. So you should think like that only in algo trading also. So you need not to bother about the cost. I recently came across an article saying that the people should look after the returns. They should not look after the you see, for example, in a mutual fund, the cost they are giving, they are bearing. The investor should look after the returns after deducting the cost only. So like that, we need to prepare our mind to view the returns after deducting the cost. Maybe the cost is 500 or 1,000 rupees or 3,000 rupees, whatever it may be. As Rachit said, we need to look our profitability after deducting all the cost involved in any business.
Okay, fair enough. That is counterpoint. That is right. I mean, cost needs to be considered, of course. How can you measure profit without cost? There is no way. But the other side of the opinion is that the cost is negligible when compared to the benefits you get out of it, and one needs to pay for a premium service. I mean, even for a reasonable service. That is, you don't have. That is how it is. Okay, now. Mr. Pandirajan, your strength in your platform is backtesting, and for Rachit sir, it is the simulation. I mean, one of the strengths we were to say. Okay, for a beginner who wants to trade, how important is backtesting or simulation for them, for a strategy developer them? Does it actually reflect reality to a reasonable extent?
Yes, sir. Surely it reflects, because without the backtesting stuff or the stimulation stuff, first time users don't get the conviction. The problem is everyone knows the strategy, but the conviction, because a lot of experts are spending so much time on their feet, so they are having the conviction. How do novice traders get the conviction? Through the backtesting and simulation only they can get the convictions. Otherwise they cannot deploy the money, because I'm seeing in live terms one of the very experienced traders. I know him personally. He and me are doing same kind of setups trading. He is deploying 500 lots. I am deploying 50 lots, because he is having more experience than me, because he has been getting the conviction. So some kind of a novice traders, we can get the convictions through the backtesting and stimulation. This is my answer, sir.
Rachit sir, how different is simulation when compared to backtesting, and
see,
how it is useful?
Yes, when we'll talk about the accuracy or percentage of the output of what we are getting out of it, backtesting helps you assess what has happened into the past, whether you are working with some indicator based strategy or whether you're working with the prices based, and you wish to see what has happened in 5 years, whether I was consistently profitable. And also backtest also helps in this case. But when we talk about simulation, simulation is about living a live experience. It is about the live moment. So for example, if somebody tomorrow you are learning from some mentor or from some YouTube video, anything, and you have a capital size wherein you can easily buy options worth 100 lots, how is it going to perform in the live markets? That is what the simulation tells you, whether you're doing a complete risk management or position sizing. Let's say I fired up a portfolio with 2 legs. Now my leg has gone up to 3 leg, 4 leg, 5 leg. I'm doing pyramiding and all those things, which simulation is something like a living experience. So your accuracy, I would say they're 90 to 95%, that you would see right in front of you that how your trade would behave in the real market, except for the slippage, because in simulation, we are the exchange. In the live market, NSE is the exchange. So that is the only difference. Rest, everything remains the same with simulation.
Okay, follow up to your answer. The slippage, how much percentage we need to make allowance?
Nobody in the world
slippage
can define that.
No, ballpark figure somewhere, some percentage.
Nobody.
Nobody.
Trust me on
Anybody
this one.
else? Okay.
Yeah, nobody in the world could answer that because eventually when the NSE system works, okay, how does that work? For example, if they have 100 rupees pay, let's say there are 5 quantities, and 105 pay there are 10 quantities. So their algos go into the sync. It checks, if it does the volume pairing. If some order is standing at that price for 10 quantity, they would immediately pass that first. Okay, and if another order is standing, the same with the 5 quantities, so they match up with the quantities, and that is how they are going to execute. So nobody, even if you write an email to NSE, I don't think so they can answer this.
slippage part. Anybody else has the answer? I mean, just for the calculation purposes, say we have backtested, but we need to factor it. I mean, even though it did not be accurate, say Mr. Pandirajan or Mr. Rajashekharan, you have any this thing, where you found the difference between the slippage and I mean, the difference between the backtesting and the actual thing? How much do you factor for your strategies?
For us, is we predominantly trade on positionals. Okay, so not an intraday base. So for us, is even there is a slippage, we have a 1 day or 2 days period decay will take out of that. So we don't really worry about that so far.
Okay, so Mr. Pandirajan, you were.
I also agree with Rachit sir point, because we cannot define the exact point. So Bank Nifty ATM options behave something one day, some other way in another day. So we cannot define that. Sure.
Maybe not in continuation to this discussion. I have a question to all the panelists. As a retail, nowadays, lot of retail clients have started asking about the algo trading, right? I would like to ask on behalf of all the retail traders, retail investors, that what are all the parameters? Maybe lots and lots of strategies available ready-made in so many platforms, right? As a retail trader, what are all the parameters I need to look before deploying a strategy? Maybe I accept with their capital what they are saying that, see, for example, you should have 1 lakh to deploy this strategy. I am ready to have that 1 lakh in my account to deploy a strategy. But apart from the capital, what are all the parameters I need to look, I need to evaluate, or I need to analyze to deploy a particular strategy?
See, when you talk about deploying a strategy, okay, into the market, the user should understand there are only two aspects into the market. One is a trend following, second is a reversal. Whenever a trend fails, a reversal is activated. When a reversal fails, a trend is activated. So which side are you heading into the market? You need to be clear with that first. Like when we talk about down south, harmonics is quite popular. Okay. Now, what exactly is that? It is a reversal strategy wherein we are anticipating that at the particular price level. And when we look at the northern belt, okay, of the country, it is purely about support and resistance. You just barge in, whenever there is a breakout, just take the trade. So you need to understand, first of all, which side you are following, and that's how you can craft and always prepare for a strategy. Do not learn the success of a strategy. Learn what you're going to do at the failure of a strategy, because if you know that, you can become a better trader. And if you're just blindly following the success, then trust me, you're not becoming a trader. You need to understand the point of failures, at what level the super trend is failing, when the moving average is failing, when harmonics is failing, when any other strategy is failing. Focus there. Okay. And then you become a better trader into the market. On to you guys.
Yes, I also add up some points with Rachit sir, because he said very correctly, trend following and mean reversal. Because I see this problem in that way, because a particular strategy should be matched on with your personality. Say, for example, if something market goes up, if I expect it goes further, then I am the trend follower. If market already goes up, then I accept more market will fall down, then I'm a mean reversal trader. So first person should pick the super trend, second person should pick the Bollinger Band strategies.
Rajashekar sir, anyway, you follow different kind of strategy, probably almost
let me
all
explain.
at the same time. So what is
can
your
you guys hear me?
this, Mr. Ramaswamy's question?
Yes, sir.
Yeah, okay. So I'll add it to the echo to some other points. They are talking about the picking up trading model, but when you go for deploying any automated strategies or manual strategies, you need to know how to design a system first. Okay. So designing a system comes with a lot of parameters. Say first, like you use the Pandirajan platform, like Quantman, you will backtest something and it throws a result. and looks good. Okay, that's all. That is based on the past performance rate, past historical data. Okay, and it is not exactly the same. It's going to be in a future market, right? So we need to know the robustness of the system. Okay, the robustness of this idea. Right now, it is only idea. It's not system yet. Okay, the idea is just being tested, and the idea is looks okay to be qualified to go for a system. Okay, then what typically people will do, it's they'll test further, or say it's deployed in Nifty, then I'll test it in Bank Nifty, or they test it in something like ITC or some other. So that if I test the same instead of different asset, it gives you the robustness of the trading strategy. If that strategy is working in similar manner on other assets, other different sector, like crude, I'll deploy and see is it working or is it creating the similar result. Then the strategy is kind of robustness. The idea is robustness. Then I'll be looking for, okay, furthermore robustness, I'll be looking for Monte Carlo analysis or changing the parameter. Is it the robustness values or not? So without doing any curve footing, okay. So in that way, everything is files down. Then I have a system so that I can deploy it. Before doing it, we have to put it in a, like a simulation, like incubator. Basically, the simulation, what Rachit said, it's a kind of incubator, and trade in live market and simulate yourself in the incubator for at least a month or so, still performing, then go for a real market. So this is a process of making ideas to strategy, strategies to system, system to simulation, incubator, incubator to live market. So this is a process. So it's not something like one trend strategy. Today I found, or yesterday I found, tested it, and then deploying, and then it suddenly fails. So this is because it's not robustness enough, or it's not followed proper systematic way of development. So one's supposed to know how to develop a system. I think I'm done. You're not audible, Suresh.
Mr. Ramaswamy and Mr. Amit Somani, any other question to our panelists, because we are at the closing stages. Mr. Ramaswamy, you want to ask more questions or say something?
No, not more questions. The same question to add upon. I asked, there are a lot of ready-made strategies available in the market. In the marketplace, a lot of strategies available. I asked the question, if I am a retail investor, what are the parameters? See, like they are saying that this much drawdown is there, this much ROI is there, this much capital is required, the number of days this much this strategy is being deployed, and this is already back tested this many years. Like that, they are giving so many data in the ready-made strategy in the marketplace. I'm asking, if I'm a layman, I'm entering into the market, I'm more eager to enter because I don't have time or whatever it may be. I don't able to control my emotions, whatever it may be. I'm asking the panelists that in these kind of 4-5 parameters, what will a retail trader has to look in to enter or to deploy a strategy? I am not a strategy developer. Maybe the panelists all are answered regarding that. If I am a strategist, what I need to do, kind of thing. But I am asking, I am not a strategist. But I want to deploy a strategy which is already available in the marketplace. What are all the parameters can we look to deploy a strategy which is available in the marketplace?
I also want to add the same thing. Like any portal I open, I see number of strategies there. Which strategy should I go for?
There are parameters are there to figure out and filter out the systems. Can you guys hear me?
Yes, please.
Yeah.
Yes, sir. Yes, sir.
There are parameters there to filter out the system. So there is a parameter called SQN, Van Thorpe number. Okay, SQN. So there is easily you can filter out using the SQN parameter, and then P&L to drawdown ratio. So these are critical ratios or parameters that one can find. Is even hundreds of systems are available. You can filter out the SQN, which is the highest SQN number. And then P&L to drawdown ratio. Then further you can refine further. So there are parameters where you can filter out existing marketplace where you find 100 systems. And just don't look for only profit. look for parameters called SQN, which is a Van Thorpe model, a number. You can Google it. You can find the higher the number is more good. Okay, basically. And then PNL to drawdown ratio. So that is also more important. If these two parameters are triggering best value, then take that and then go further research, dig and deep, and deploy it. I hope I answered it.
Super, sir. Yes, sir. Yes, that is what I'm looking for. I asked.
Yes, given two valid points that we can just look how we can deploy the strategies.
Of course.
Thank you, sir.
Mr. Pandirajan, in your opinion, which are the
Yes, sir.
parameters?
Because even though we are offering marketplace, I would say please design on your own strategies, because then only it should have matched with your expectations. One thing, if you want to go with the marketplace, then first thing you have to see is drawdown. So first you look whether this drawdown I should have faced or not, because will I accept this drawdown or not. If you accept the drawdown, then only you deploy the strategies. Otherwise, I don't advise to deploy the particular strategy.
Sir, Mr. Rachit, please.
About deploying the strategy, as I told in the beginning itself, even the simplest of the strategies, like Mr. Pandirajan has also highlighted, super trend and all. I'm talking about from the layman's perspective, a newbie perspective, I would rather say, or amateur. You can use anything, whatever you like, but test it out and make sure that your risk management is in place. Let's say you are entering with a capital of 20,000 or 50,000, and you at a super trend signal, you are willing to buy a call option. Okay, buying definitely requires less capital, so you would be done buying with the one lot of it. And with 20,000, you're getting a sizable return of 500 rupees or 400 rupees, which might happen on a bigger time frame during the intraday as well. So just move out of it. Every strategy is profitable. Every strategy they were designed, every indicator is, in a way. Only thing is that how do you manage your risk? How do you manage your position? That is the art of learning. So whether you're following up any new ready-made, as Mr. Pandirajan said, that marketplaces may be there, they may be with their own perspective, but when it comes to the position sizing or handling, those strategies are not meant to do that. Okay, so designing your own strategy would help you leverage out better with the risk and optimize better into the market.
Super, sir. Thank you. Thank
Okay.
you, all the panelists. Maybe
Thank you.
those who are watching this event will get a better idea about deploying a strategy which is available in the marketplace. Maybe I'm very happy with the answers, what the panelists, what the experts has given.
Okay, it's very good. There is one question. Let's see, we'll take it. Let's find out. If not, okay, fine. We'll do one thing. Okay, so it's been almost 1.5 hours, and in fact more than that. And we had a good discussion and a lot of ideas thrown around and light thrown around on ideas. And I personally have learned much. I'm sure that the people who are watching would also agree with me when saying that they learned something new today. And hopefully whatever they have learned, they will deploy it in their trading decisions and then make reasonable profits. We at Zebu will try to help you by bringing these kind of sessions every now and then. Why are we doing it? Why are we doing it? Because in the last 2 years, more than 3 crore people came into the market, either as an investor, as a trader, to make their money. Not many are guided properly. And there is a statistics which says that only 1% of the people even make more than FD returns itself. Only 1%. That is less than 5%. They are making only more or less than 1% are making more than 5% return in a year. So imagine 3 crore people trying and not making money. So that is the reason why Zebu is coming up with this series of seminars called Earn Your First Million Here. We will be bringing these kind of presentations, webinars. We'll be taking to the colleges, online seminars, offline seminars, investor awareness programs. So we request the audience to learn from the platform, whatever we are providing, and ensure that make your first million. Thank you. This is all from Zebu. Thank you. Join us for the next time. I thank you all the panelists, Mr. Rajashekar, Mr. Rajish Seth, Mr. Pandirajan, Mr. Ramaswamy, and Mr. Amit Sobani. Thank you all. Join us for the next time.
Thank
Happy
you,
trading.
everyone.
Thank you.
Thank you, Zebu,
Thank you.
for giving us the opportunity. Thank you. Thank you very much. It's a good initiative.
Thank you.
Thank you all the participants, all the panelists and experts, and thank you, Suresh.
Thank you.
Bye. Bye.
Thank you all the panelists and Suresh.